How to invest in mutual funds. Investing in mutual funds is relatively easy and can be done in a few simple steps. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Determine your investment goals and risk tolerance. Before investing in mutual funds, you need to determine what your investment goals are and how much risk you are willing to take. This will help you select mutual funds that are best suited to your investment objectives. Determining your investment goals and risk tolerance is an important first step in investing in mutual funds. Here are some steps you can take to determine your investment goals and risk tolerance. Identify your financial goals. Start by identifying your financial goals. These may include saving for retirement, buying a home, or paying for your children's education. Determine your investment time horizon. Your investment time horizon is the length of time you plan to hold your investments. For example, if you're saving for retirement, your investment time horizon may be 20 or 30 years. Assess your risk tolerance. Your risk tolerance is your ability to withstand fluctuations in the value of your investments. Ask yourself how comfortable you are with the possibility of losing money in your investments. Consider your financial situation. Your current financial situation may also impact your investment goals and risk tolerance. Factors such as your income, expenses, and debt can all play a role. Consult with a financial advisor. A financial advisor can help you assess your investment goals and risk tolerance and provide guidance on which mutual funds may be best suited to your needs. Choose a mutual fund company. There are many mutual fund companies to choose from, so it's important to do your research and find a company that offers mutual funds that align with your investment goals and risk tolerance. Choosing a mutual fund company is an important step in investing in mutual funds. Here are some steps you can take to choose a mutual fund company. Research mutual fund companies. Start by researching mutual fund companies to find ones that offer funds that align with your investment goals and risk tolerance. You can use online resources like Morningstar or the Securities and Exchange Commission's EDGAR database to research mutual fund companies. Consider the fund's expenses. Mutual fund expenses can impact your returns, so it's important to consider the expenses of the funds offered by the mutual fund company. Look for mutual fund companies that offer low expense ratios. Evaluate the fund's past performance. While past performance is not a guarantee of future results, it can be a helpful indicator of how a fund has performed in the past. Look for mutual fund companies that offer funds with a consistent track record of strong performance. Assess the fund's investment strategy. Mutual fund companies offer funds with different investment strategies, such as growth or value investing. Consider which investment strategy is best suited to your investment goals and risk tolerance. Check the fund's minimum investment requirements. Some mutual funds have minimum investment requirements, which may impact your ability to invest in a particular fund. Make sure you understand the minimum investment requirements of the funds offered by the mutual fund company. Select mutual funds. Once you have selected a mutual fund company, you need to choose the specific mutual funds you want to invest in. Look at the fund's past performance, expenses, and investment strategy to make an informed decision. Selecting mutual funds is a critical step in investing in mutual funds. Here are some steps you can take to select mutual funds. Determine your investment goals and risk tolerance. Before selecting mutual funds, determine your investment goals and risk tolerance. This will help you select mutual funds that are aligned with your investment objectives. Choose a mutual fund category. Mutual funds are categorized by their investment objective, such as growth, value, or income. Choose a mutual fund category that aligns with your investment goals and risk tolerance. Research mutual funds. Once you've chosen a mutual fund category, research mutual funds within that category. Look at the fund's past performance, expenses, investment strategy, and holdings to make an informed decision. Evaluate the fund's past performance. While past performance is not a guarantee of future results, It can be a helpful indicator of how a fund has performed in the past. Look for funds with a consistent track record of strong performance. Consider the fund's expenses. Mutual fund expenses can impact your returns, so it's important to consider the expenses of the funds you are considering. Look for funds with low expense ratios. Open a mutual fund account. To invest in mutual funds, you need to open an account with the mutual fund company. You can do this online or through a financial advisor. To open a mutual fund account, follow these steps. Choose a mutual fund company. Select a mutual fund company that offers the funds you want to invest in. Decide on the type of account. Mutual fund companies offer different types of accounts, such as individual, joint, or retirement accounts. Choose the type of account that best suits your needs. Gather necessary information. Collect the required information, such as your personal identification information, employment details, and financial information. Complete the application. Fill out the application for the mutual fund account. This can often be done online or by mail. Submit required documentation. Submit any required documentation, such as a copy of your identification, to the mutual fund company. Fund the account. Once your application is approved, fund your account by transferring money from your bank account or by sending a check. Choose your mutual funds. After funding your account, you can choose which mutual funds to invest in. The mutual fund company may provide guidance on which funds may be suitable for your investment goals and risk tolerance. Remember to read the mutual fund prospectus carefully before investing to understand the investment objectives, risks, fees, and expenses associated with the mutual fund. Additionally, it's always a good idea to consult with a financial advisor before making any investment decisions. Invest money in the mutual funds. Once you have opened an account, you can invest money in the mutual funds you have selected. You can invest a lump sum or set up regular contributions. To invest money in mutual funds, follow these steps. Determine your investment goals and risk tolerance. Before investing in mutual funds, determine your investment goals and risk tolerance. This will help you select mutual funds that are aligned with your investment objectives. Choose a mutual fund company. Select a mutual fund company that offers the funds you want to invest in. Open a mutual fund account. Follow the steps outlined in the previous question to open a mutual fund account. Choose your mutual funds. Once you have opened a mutual fund account, choose which mutual funds to invest in. Consider factors such as the fund's investment objective, past performance, expenses, investment strategy, and minimum investment requirements. Decide on your investment amount. Determine how much money you want to invest in the mutual fund. Many mutual funds have minimum investment requirements, so make sure you understand the requirements of the funds you are considering. Place your order. Place your order to invest in the mutual fund through your mutual fund account. You can often do this online, by phone, or by mail. Monitor your investments. After investing in mutual funds, monitor your investments regularly. Review your account statements and track the performance of your investments to ensure they are aligned with your investment goals and risk tolerance. Remember, investing in mutual funds carries risk, and you should always consult with a financial advisor before making any investment decisions. Additionally, be sure to read the mutual fund prospectus carefully before investing to understand the investment objectives, risks, fees, and expenses associated with the mutual fund. Monitor your investments. After investing in mutual funds, it's important to monitor your investments regularly to ensure they are performing as expected and to make any necessary adjustments. Monitoring your investments is an important step to ensure that your mutual fund investments are aligned with your investment goals and risk tolerance. Here are some tips to monitor your mutual fund investments. Review your account statements. Review your mutual fund account statements regularly to understand the performance of your investments. Check for any errors in your account and ensure that the information is accurate. Track the performance of your investments. Monitor the performance of your mutual fund investments by tracking their returns over time. Compare the returns to relevant benchmarks to gauge their relative performance. Reassess your investment goals and risk tolerance. Your investment goals and risk tolerance may change over time, so it's important to reassess them periodically. If your investment goals or risk tolerance change, consider adjusting your mutual fund investments accordingly. Consider rebalancing your portfolio. Rebalancing your portfolio involves adjusting the allocation of your mutual fund investments to maintain a target asset allocation. Rebalancing can help you manage risk and ensure that your portfolio is aligned with your investment goals. Stay up to date on mutual fund news. Keep up to date on news related to your mutual fund investments. This can include news related to the mutual fund company, changes in the management team, or changes to the investment strategy. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.